Let's take a look at all things money matters now. The JSE All Share Index is slightly lower, marking its third straight session of declines attributed to the prevailing risk-off sentiment in global markets due to ongoing tensions in the Middle East and uncertainty surrounding the trajectory of interest rates. Grant Nader is with Benguela Global Fund Managers. He's the senior portfolio manager there, and he joins us now for the latest market developments. Grant, thank you very much for your time this afternoon. So it looks like the Rand rally. It looks like the Rand rally has come to an end. What's driving moves?
It has. It's been a volatile week, actually. And if I look back over the past week, it's more or less flat. It's weakened by about 0.4%, but it feels a lot worse than that. We were strengthening nicely. We've given a lot back. And there's a number of factors at play. We saw the CPI data yesterday in South Africa come in a bit higher than expected. That changes the potential for the rates outlook in South Africa, perhaps a bit of pressure on the SARB that wasn't there before to raise rates again. Plus, we see a significant strengthening in the US long-term interest rates, moving out to 5%, which is the highest it's been since 2006, 2007. So some serious global pressures and question marks being raised over inflation and the duration of rate hikes, putting downward pressures on all global economies, but particularly emerging markets like ours.
We know how the governor is always wanting to stave off inflation. Let's take a look at Mondi.
Yes.
It's published its third quarter trading update. Help us make sense of the numbers.
So, first of all, the update hasn't been particularly well received. The stock is down 6% today. But if, the EBITDA is down 42% from the year-on-year number compared to this quarter a year ago. But I think a little bit of context is needed. In last year, there was a lot of over-ordering coming out of COVID. There was a lot of supply chain challenges and issues, and companies tended to over-order and overstock on inventory. And that is a process that needs to unwind. So they're actually under-order now. We're seeing that order book unwind. And of course, we know the global challenges. The global economy is slowing. They are seeing some of that order book decline. So the container board sector, one of their major sectors, that's doing well. Prices are stable and the order book is rebuilding. But in the kraft paper, they are seeing declining volumes and orders and pressure on prices. Against that, they are managing their costs fairly well. Some of the costs are coming down, and they're doing what they can. They can only control a certain number of things, and it looks like they're doing a good job on that front. But as a cyclical company, it really is subject to what is happening in the economy, and there's only so much they can do. So I think a reasonably creditable result in the context of the challenges out there.
How much does technology or the advent and advancing of technology play a role in this? You noted that there's a decline in the ordering of paper.
So technology, they've actually diversified quite nicely away from the generic paper type of products, and they focus on specialized packaging. They're focused on green packaging. They invest heavily in packaging technology, and they've got a really good track record of investing of capex that's focused on specialized packaging, and that's really their niche. They run a very low cost base relative to a lot of their peers. So in terms of the technology demand on packaging, that's actually not a factor right now relative to paper. And what is helping them is the move toward ESG and green packaging, and they've positioned themselves very well in that space and invested in the technology required to build those products.
Okay. You mentioned the term capex. What does that mean?
So they are quite strict and clever around the capital outlay they spend to build these factories that specialize in these unique products. So they're quite a strict management. They only allocate money to a new project where they can fairly certainly see the returns are better than the cost of capital that they're using to deploy in that. So quite an astute management team. You don't want to invest in projects that deliver substandard returns relative to the cost of your capital. And so they're very good at doing that. They have a 1.2 billion capex program that they plan on rolling out. So they're still investing for future growth. If you don't invest, it's very difficult to grow.
Okay. The National Consumer Tribunal has imposed a 1 million rand fine against Vodacom. What's going on?
That's a really interesting one, and I think the fine is well merited. Having a read of that situation, it looks like during COVID, specifically 2020 and 2021, when people were under the most pressure wanting to cancel their contracts, Vodacom made it incredibly difficult. They imposed a 75% penalty. They imposed other restrictions, and they insisted that people pay all backlog of fees and the penalty before they would cancel the contract. And this, in fact, contravenes the Consumer Protection Act, and that is the predominant complaint. And so, it really does seem really unreasonable. And you can't make it so difficult for people to cancel, so onerous, that they effectively can't cancel the contract. They have to be allowed to cancel in a way that is manageable. And so that was a real contravention. There were one or two other situations, for example, where they didn't inform people that their contract was expiring. And so the contract would then renew without the notification required from Vodacom. So, in my opinion, the fine is well warranted from what I can see. And in fact, it's probably a bit small. I don't think R1 million is really a drop in the ocean for Vodacom. And I question whether it's enough to change future practices. Possibly the reputational damage could be much larger than the cost of the fine. So there is that.
Could it be, though, Grant? Because you'll find that in some instances it's much easier to get out of a lifelong commitment you made before a priest than getting out of a contract with a cell phone provider. And so when you speak of the sanctions probably not being enough, but reputational damage maybe, I mean, how long has this been going on?
Yeah, that's true. I think if we had to go and look at the list of complaints against either one or the other in this market over the past 20 years, it seems like an endless stream of challenges. And I guess this is the argument for competition. And they try to introduce Telkom, Cell C as competitive forces, but they aren't really struggling. And if they're not offering a viable alternative, then it really is a difficult market to provide competition. And so I guess it's going to be more of the same. Whether it's 2 or 4 operators doing the exact same thing, it doesn't help the consumer, does it?
And therein lies the tragedy. Okay, let's take a look at Nestle. It's posted lower than expected 9-month sales in terms of growth. Talk us through their performance.
So what stood out here is, although the sales were lower, they still came in at 7.8%. The price increases Nestle pushed through around 8.4%. So they saw a contraction in volume of about 0.6%. But that's still pretty decent if you consider the increase in prices of 8.4%. But it does intimate that people are starting to push back against this incessant price increases, these inflationary forces. And there has been accusations that some of these consumer staples, the likes of Nestle, that perhaps they've been taking advantage of inflation to just push constant price increases through. As a staple, people tend to accept those price increases more easily than a discretionary, for example, clothing or cars and the like. So I suspect they are having to focus now on trying to drive volumes, manage the cost, and not push through prices that are so high anymore. And the question becomes, if prices start to moderate or internal cost pressures, do they then pass on cost cuts to the consumer? And we haven't really seen a sign of that. We know from our own experience that doesn't happen. But what's happening is private label begins to take a foothold and people start to look for alternatives. So I think they need to manage this cost push that they're trying to drive upon the consumer. I think the inflation they're passing on is getting a little bit excessive, and I hope to see things moderate.
Okay. Grant Nader, thank you very much for your time as always this afternoon. Grant Nader is with Benguela Global Fund Managers. He's the Senior Portfolio Manager there.